Hi, my name is Michael Smith. I'm the team lead here at StocksToolbox. I want to thank you for your interest and give you an indication of why this service is going to be worth your time. If you want to have greater confidence in your trade entries and exits, I'm sure this is going to be worthwhile for you. But just like you, I hate getting a sales pitch, so I'm just going to share a bit of my trading journey, and maybe that will frame why we created this service. When I was a kid, I knew we were poor, but Sears' lifetime guarantee on their tough skin jeans really drove it home for me one day when I was camping with my dad. My parents were divorced. My dad would pick us up on weekends and we'd do fun stuff, and this time I think we were doing some long-range target shooting in the desert. It was cold when I crawled out of the tent that morning, so I scrambled up close to the fire. And before long, I was warming up, and then I noticed an odd smell. Looking down, I noticed my pant leg was brown and smoking. I reached down to check it out, and my pants broke like a taco shell. They broke. The worst part is I knew I'd get a brand new pair because every time my tough skin jeans got a hole in them, Sears would replace them for free. That was a great deal for my single mom, but it made me the butt of jokes in elementary school. When you're growing up, you don't really realize you're poor until other kids make fun of you. When I became a teenager, I was very much aware we were poor. And I was starting to learn that poor begets poor. It's common for children to remain in the same socioeconomic level as their parents, and I could see that odds were for me to remain in a cycle of poverty. But I had a fantastic father who taught me how to work. When I was 12, I started going to work with my dad in his paint and wall covering business every day I had off school and weekends. I was determined not to be poor. Though I wasn't savvy enough to realize it then, I was breaking a multi-generational cycle of scarcity. Actually, my dad was breaking it and I was just the beneficiary, but the work lessons I learned from my dad shaped my whole life. There was another guy who I viewed to be a mentor when I was growing up. He was an investment banker, or that's what I thought then at least. Turns out he was just a local wheeler dealer who found pink sheet listed mining companies and used their public skeleton structure to take a viable company public in a reverse merger. But he had a car phone in 1983. We didn't call them cell phones then. And he made calls nonstop all the way to and from work. And I thought he was a genius, so that was enough for me. I gave him $10,000 I'd saved up, and 2 years later when the stock finally started trading, I sold all of it on the first day and made $50,000. That was the first bite of the trading bug for me, and the next flare-up didn't happen until E-Trade became a thing. I was working as a product manager in a software company, and we had just been acquired. I was supposed to hire a team to build a product showing the fruits of the marriage. With a team hired, I waited 3 months while the executives argued about which company's technology would be showcased. Numerous times I'd walk into my boss's office and say, "You know I'm not doing anything out here, right?" And he'd say, "Yeah, we gotta get you going on something. Just sit tight for a bit." I suck at sitting tight. I opened an E-Trade account, read books by John Murphy and Benjamin Graham, and I sat in my cubicle trading my tiny account. It was early 1998, and if you bought something back then, it typically went up. The brightest developer on my team walked into my cubicle as I was closing a trade and said, "Oh, so you trade too? You need to come and see what I started." We met after work and he showed me the early stages of a database and search utility for finding stock patterns. Sitting tight was getting to both of us. And we'd both been doing well trading, so we decided to build out this tool and become money managers. We met nights and weekends for 18 months, and then we had a product that was faster and easier to use than any product we knew of. It was too good not to commercialize. So we raised $500,000, opened an office, and in 3 months we had tens of thousands of users in 160 countries and 3 buyout offers. We sold to a TD Ameritrade. As I look back at what we built, it was genuinely orders of magnitude faster, but all it did was find patterns. And we were condescending and brash enough to suggest that each signal was either a bullish or bearish pattern that should be taken in the prescribed direction every time it occurred and on every symbol. We had 0 validation tools. Our version of the scientific method was, "It's going to go up because I said so. Trust me, I've seen this pattern before." Our deal with Ameritrade included an 18-month earnout, and when it was over, we left the company to finally pursue our goal of being money managers. But by the time we had an office together in the summer of 2001, Ameritrade stock had plummeted and the aftermath of 9/11 was right around the corner. We didn't have enough confidence in our tool set to trade the market, so we put our money into real estate and inventory financing. We were too scared to eat our own dog food. As the market started to recover, I tiptoed back in, starting a hedge fund selling Volatility in 2004, which did very well until 2008. Selling Volatility isn't too complicated, but when the VIX goes from 12 to 92 in a short period, it ends very badly. I lost 7 figures personally and a lot of money for my clients, which was even more stressful. For those unfamiliar with selling Volatility, you basically pick an area where you think the market won't go within a fixed period and place a bet the market won't go above or below your levels. I'd experienced the full palette of trading, and I was fortunate to be ahead of the game, but at this point I was mentally and emotionally exhausted. I resolved to stay out of the market until I had the confidence in my method, until I had a tool set allowing me to perform a month's worth of due diligence in 20 minutes. I reasoned my biggest hurdle would be in developing an efficient routine for finding and evaluating prospects while balancing opportunity costs, meaning I needed a system that could probe thousands of opportunities, but distill them to just a few. I needed to ignore the good trades and focus only on the best trades. But how can you thoroughly evaluate all the opportunities triggering daily before the market opens the next morning? That's the problem I had to solve for myself. I would need hundreds of strategies covering all aspects of trading, like volatility, volume and price patterns, momentum, breakouts, trending, mean reversion, support and resistance. I would need to test each strategy and symbol combination directionally long and short with discrete, fixed, time-based exits. And choosing the best opportunity would need to be as simple as applying a weighting to my core metrics and then having an algorithm distill it down to one objective function, just a simple universal score. If I had these things, I could trade with the confidence I've always craved and coveted. And that's what StocksToolbox is. That's what our team spent the last 4 years grinding on. That's why you need to experience what this time-saving tool can do for you. We know you have no asset more valuable than your time, and we respectfully submit this as a worthy investment. See you inside.